Welcome to Investment 101, where we break down the basics of property investment and help you make smarter decisions along your journey. I'm Lewis, and today we'll be taking it back to basics. So, where do you get started with property investment? In this video, we'll discuss the crucial first steps, bust some common myths, tell you how to identify risk, and also show you how to spot a scam. First steps in any property investment is for you to set yourself some clear financial goals. Are you looking at property more for long-term capital growth, or are you more interested in the short-term cash flow, i.e. rental income? You need to research your options, look at which cities offer the best capital growth or the best rental income, again, dependent on those goals that you set out in the beginning. Next, you need to build your team. In this journey, you're going to need mortgage brokers, solicitors, sales and lettings agents, and if I were you, I'd choose an agency with a complete service. So the biggest misconception for me with property investment is that you need to be really wealthy to start investing. Now, whilst having capital to start is important, there are financing options like mortgages available that will make things slightly easier for you as you start. Now, most investors that I know have started from really modest means and then grew their portfolio up over time. Another massive misconception with property investment is that it's always passive income. Now, whilst you can generate a steady income through property investment, it's not always completely hands-off at the start. So you will need property management, you will need to keep up with maintenance, and you will also need to make sure you're kept up to date with compliance with regards to legal matters. Having a management agency to take care of these things for you will take a lot of pressure off of you, especially at the start. Another one for me is that people think that any property makes a good investment. It's not necessarily true. Not every property will provide you with a good, steady return. So research is key. You need to look at location, demand, and also what's going on in the area. These three things are really crucial and will help shape your future moving forward. Now, what kind of returns can you expect from property? Well, it completely depends on the type of property that you go for and also the strategy that you set out in the first place. So let's break it down into the two main aspects and we can take it from there. The first one is going to be rental income. Now, rental income completely depends on the property type and the location. On average in the UK, rental yields range from around 3 to 7%. Again, dependent on the location and which city predominantly that you buy into. If you, for example, opted for a serviced accommodation, Airbnb style property, this return can almost double. So the next aspect is going to be capital growth. In the UK, we do have a steady increase in value. Properties have appreciated around 50% in value over the last 10 years. And in some areas and some cases, it has been significantly more, which is why research into location is very, very important. If you, for example, find something in the heart of a regeneration scheme, this is typically where you're going to see the maximum amount of capital uplift. Now, it is important to note that property is a long-term strategy, and whilst you can generate a steady income over time, the maximum part of your returns is going to be over a number of years via capital growth. So the next part about property investment is understanding how to spot a scam. Unfortunately, there are fraudulent schemes out there looking to prey on inexperienced investors. Know how to spot a scam. Firstly, research into the kind of developers that you're going to be working with. Make sure they've got a proven track record, check on their reviews, and do some overall due diligence on them yourself. Secondly, look out for deals that seem like they're too good to be true. If you're offered a deal that with high returns and little risk, it's often a red flag and I would stay clear. Always consult with professionals. Use a reputable agent with experienced sales consultants that can guide you through this process. So look out for pressure tactics. If, for example, the sales agent is moving quicker than you'd like them to and asking you to make a decision without seeing the full marketing information and seeing the full breakdowns, then proceed with caution. By staying informed and cautious, you can better protect yourself from any potential property scams. So, now you know the basics of property investment. What's stopping you? Get in touch today for a free investment strategy meeting and let's see how we can help you. Thanks for watching. We'll see you in the next episode of Investment 101.